what is the problem with large business owners or somebody who is acquiring a lot of companies? They think that, okay, once they acquire a company, once they acquire a subsidiary, they'll get larger and they can show higher profits and so on. But the catch comes when they have to record a very high impairment expense because they didn't initially record a correct goodwill. Hello, this is Haya Fayaz, and today I'll be covering about IFRS 3 business combinations and what it expects out of us. So basically, when you acquire a company, the very first thing is you need to make sure that it is a business or whether you have acquired a group of assets. So what happens is sometimes whatever you have acquired represents the acquiring amount, the purchase price that you have paid for it represents a very large portion of the assets and the fair value of the assets, and that means that it is not particularly a business acquisition, or it could not be a business acquisition. It is not hinting towards that. Business acquisition is where you're acquiring the brand, you are merging the people along with it, you're also buying the entire chain of hotels, for example, and so on. So first of all, be clear about the business definition under IFRS 3. Secondly, if you need to know about the step-by-step process of how to account for it. So it's not like you just got and merge the profits, add up the profits, revenue, cost of sales and all of that. Yes, that is there. But before that, there is a step-by-step process. So the first step is where you identify the acquirer. Who is the acquirer? Who is the acquiree? Who is the parent? Who is the subsidiary? Or who is the investor? And who is the associate? Everything should be properly recognized. We have to properly jot that down. How much percentage has been bought? Which is the company? Every single thing has to be noted down. Second thing is where you identify the net assets entirely, net assets, liabilities, even those which are not recognized before when we had acquired. So for example, there might be some contingent liability which occurred, which was emerged only on the date of acquisition. So for that purpose, we'll have to probably, record a provision or record a disclosure or whatever on the date of acquisition. Finally comes the most important part of the working, that is a goodwill calculation. So it is just the difference between the consideration paid and the net fair value of all the assets, the net assets. So how much is it excess or how much is it a negative amount, we'll find that out. So basically it is a consideration paid, the NCI value on that date if there is a non-controlling interest. If for example we have just acquired a proportion, 80%, 20% is by somebody else, the fair value, subtraction of fair value of net assets, and finally if there's any impairment by the year end, we'll record it. So that's how we calculate the goodwill. And if there's a final amount which is negative, we'll record that as income, that is gain on bargain purchase. The final amount is positive, then you would have to record that as an asset, as goodwill under non-current assets. If you found this useful, please like and share guys, and follow me for more. Bye.